You're here today to learn about closing costs for the buyer who is financing, then guess what? You are in the correct place. Before we get into the video, let me introduce myself. My name is Erika McLean and I'm a realtor at Simply South Realty in New Brockton, Alabama, and we service the real estate needs of the Wiregrass area. So if you are moving to the area, if you check down below in the description box, I'll have a link. If you're interested in my buyer's moving guide, feel free to click on it. It's free and I will send it to you via email. So click down below. Also, make sure if you haven't done so already that you have subscribed to my channel. So hit that subscribe button and make sure you click the notification bell, because that's how you know I have uploaded a video. If you don't, you may not know when I've uploaded. Anyway, also, if you get value from this video at all, maybe 1 ounce of something, if you will, click that thumbs up. It would be very much appreciated. Okay, so without further ado, let's get started. Okay, hey guys, I had to put my glasses on for this next part, and it's about to get very, very boring. So you've got to you have to hang in there with me. Don't give up on me yet. I do want to make clear when I'm speaking about the buyer's closing costs when financing that we are not going to be talking about any money that's required down. So whoever the loan company is may be asking for 20% down, and if you're using like FHA or VA or USDA backed loans, they're of course going to have a funding fee that's involved. But any money that they may require to put down, we're not talking about that, because that's money that's actually going to go on to the principal amount, okay? And it will show up on one of my, well, it's going to show up on my conventional loan example that I give you, but that's not a fee or a closing cost, just to kind of make that clear. A fee is something you're paying for and giving to another party for a service that is rendered, if that makes sense. So that is what we are essentially going to be talking about with closing costs when dealing with a mortgage company for the buyer. Okay, this is done on an Excel sheet. This is going to be a USDA purchase disclosure, and I want to just show you, I'm going to show you this one and then a conventional, but I want to point out USDA, VA, and FHA backed loans, which now these entities do not loan money. They just insure loans that are given by banks to individuals. So you're not actually receiving a loan from these entities. Now USDA does have a program called USDA Direct, where the money is actually coming from them, but that's not what this one right here is that I'm doing. So that's another whole other video for that. But this is just a USDA loan. All of them, USDA, FHA, and VA, do have funding fees associated. So this one is calculating at 2.75% of the sales price. So on top of the sales price, and again, this is if you are financing the funding fee in with the purchase, it's going to be $91,448. Again, I'll do another video on money down and these different type loans. Too much to explain here for today. All I'm going to talk about is going to be closing costs. And on my screen, you're going to see closing cost here. Over here in this section, sorry, don't get dizzy with the arrow. This is going to be other expenses, like I'd mentioned earlier, home inspection here, and miscellaneous, whatever other things that could be added in. Prepaid items are here, and prepaids include 15 months of insurance and 3 months of taxes. This is sometimes paid, sometimes the seller will pay for these, depends on what you negotiated for. Sometimes they just won't. And over here I've put seller capped closing. So in this scenario, the seller is saying, I don't care what the amount is, I'm not paying any more than, helping you with more than $4,000. Okay, but let's get back to the closing cost at hand. These can vary. There can be more blanks. Again, like I said, this is general. So you have the attorney fee. The attorney fee is going to be a percentage of the sales price too. So in this case, we have $549. That's what the attorney is going to charge to do the work, to close this loan, do all the research that they need to do, gather the documents, get everything together and ready for signing for the seller and buyer to meet together. The recording fee, that's done at the courthouse. Appraisal, doc fee, and underwriting. I'm sorry, let me back up. Appraisal, the bank is going to order it, and they're going to get someone, generally someone local, to go out, appraise the house to make sure that it appraises for the amount it is being sold for. And the doc fee and underwriting, now these are fees associated with the lending company, and it can include a variety of things. Also, application fee is going to be, now I have $30 here. I mean, I've seen it up to $200 that they charge. So that's going to be on the low end. And your tax service fee, amortization fee, these fees, and flood certification, those are simply just fees where they're pretty much paying a third party to go out and, for example, the flood fee, to make sure that you're not in a flood zone. This fee is simply, you're paying pretty much for the bank to come up with a schedule of how long it's going to take you to pay off your loan and what happens every time you make a payment to the principal. So that's what that is going to be for. Express mail is going to be there to take care of any fees associated with docs being sent back and forth. So nothing is free. You're paying for pretty much everything that has to be done. So on this loan, I'm estimating $2,555 to close. I always tell my clients, again, it is an estimate. Now, this number on my sheet is a total estimate of their expenses, and what it's going to do is it's going to pull in this amount for prepaids and this amount for other expenses over here, and it's going to put those in to that amount. And that is your USDA. That's what it's going to look like. Okay, this is a simple, just conventional loan. This one I've got a different sales price in just so you can see how the numbers fluctuate. But let's say you bought a house for $145,000, and the bank says, okay, we'll loan you this money, but you're going to have to bring $72.50 to closing. And this is cash you have in your savings, in your piggy bank, under the baseboards of your house, wherever you keep it. They want you to bring it. It's going to go towards your house. But again, that is a percent, and here is 5. I mean, it's depending on the loan, it can be up to 20%. Just depends on what type of loan that you're getting. And also, if you're not putting down 20%, you're going to have to finance what they call mortgage insurance premium, your MIP, and that is simply a premium to protect the bank because they're loaning you this money so that if you decide to bail and run and go wherever it is you want to go other than that house, that they get their the house is insured, so they're not worried about losing any money. So that is going to also be factored into your mortgage. And after a certain extent of time, once you reach that 20% down, that should disappear, but you do need to check with your loan officer about that. So if you're someone who's not putting down 20%, you can expect to have to finance this insurance premium in. So your total loan amount, now that we add the $2,000, would be $139,750. Just like the other, I have other expenses over here, like the home inspection, and then prepaids on this house I put over here. Remember, that's your insurance and your taxes that we have just estimated over here. The attorney fee, recording fee, all of this is pretty much the same as what you saw earlier, except if you notice title insurance, I've changed the amount here. That, it depends on what company that you get it from. I've seen it as low as 130, I think was the lowest I've seen, all the way up to 300. Just depends on the company. So some of these numbers will change for sure. And again, I can't stress this enough. This is simply just an estimate. But these are a variety of things that you can expect to see at closing. Okay, I hope that video helped a little bit. I found myself kind of stumbling going through explaining it. But I wanted you to see all of the different things you can be charged for. And honestly, it's just going to vary from lender to lender what they charge for. And I don't have a net sheet for every lender out there. Actually, before I even began videoing this, I looked at one that I saw that I had saved, and I thought if I put this up, it's just going to confuse you guys even more. But look at the different closing costs. And if you notice, when I did the screen recording, I talked about the flood certification fee, the amortization, blah, blah, blah. That's so hard to say, but that's where they go through and figure out how much your principal is going to go down after you make a payment each month, and kind of gives you an idea of where your loan will be month to month as you make your payments. But some people charge for that. I checked with one lender, and she said, well, my company doesn't charge for that. So, I mean, it's $10. I threw it on there just in case. But it's stuff like that you need to check on. And the one sheet that I was checking to look at, their application fee was right at $200. So I had $30 on mine. Again, that's going to vary from lender to lender. So there's a huge difference between $30 and $200. So if you're in that category, you definitely want to shop around and make sure you're with a lender and seeing what their closing costs are going to be. Every little bit counts when you're buying a house, especially, if you're buying a house and you're going to have to turn around and put a lot of money into it. I promise you, every little bit that you can save at closing that you could put towards your house, that's even better. Sometimes you just have to think ahead like that. But I hope you got some sort of value from this video. Maybe you see that closing costs are important. You do need to see how your money is being spent. And in the case of the conventional loan, you see if you don't have the 20%, that you're getting that MIP premium that's in there, and that's no fun to pay. But we could sit here and jostle the idea, well, if you can't buy the house, then should you rent? And I would say, nah, go ahead and buy the house, regardless if you have to finance, because you only are financing the MIP for X amount of years, and you can always put more money towards your loan to help, knock that payment down, if that's even possible. For some people, it's just not. It's just how it is. I was one of those people. I had to do the MIP with my very first house. I didn't have enough for the down payment, so I've been there, I've done that, and it's still hard. Right? I made it through. But just something to think about. Don't forget, hit the subscribe and click that notification bell so that you are notified whenever I put up a video. And until next time, I'll see you guys later.